Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 31st of May, the last day of the month here, 2022. I'm going to ask you again for a quick mic check. Let me know where the mic is, if it's too hot or if it's clear, if it's sexy as hell. This is episode number 2243. Reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at lots of echo. Not seeing where the echo is from. There's one source. Big echo. All right. Sorry about that, guys. As I said, we will eventually master this issue here of having all kinds of wacky stuff happening. Yeah, I'm not seeing where the echo is coming from. There is no other feed other than the mic, so I'm not really sure where that's coming from. All right, let's just keep pushing through. Looking at the pre-market summary sheet from Convergent Trading. This morning, we see mild risk off in the way the market is postured this morning. We have had a pop higher in the overnight session. We did, yesterday was a holiday. I've wiped that off of my charts, and I'm going back to Friday as the last session. I'm using last night's reopen as the overnight. Essentially, per exchange rules, today's session, which is Tuesday, actually started on Sunday at 5 p.m. Central, and it runs through till today, till 4 p.m. Central. So this is considered one big session from a settlement and margin point of view. But I removed the holiday trade because it shows up as an RTH session for me, and I don't need that interference. So in any case, we have mild risk off. We're seeing a pop in crude. That is based on the fact that the Russians are being cut out by the European Union. They expect that by the end of the year, approximately 90% of the volume of Russian energy coming into Europe will be eliminated. They made a carve out for Hungary in that the sanctions will not involve energy coming through pipelines, but they look like they have a consensus, and of course that takes supply off the table. And as all of you know, those of you who have studied a little bit of economics, know that you cut out supply and the supply demand curve shifts up and to the right, and therefore prices go up. And that's what we have here today. Big pop today, almost 3% currently, with crude putting in a high at 119.47. It's off by $1 so far. So we look like we're heading for the high of the year again. In addition to that, we have China cutting taxes on autos, certain categories of autos, basically continuing to add stimulus. Shanghai is reopening. The Chinese government is taking a softer stance on infections, and it looks like it is becoming a little more business friendly. So Shanghai's reopening. That is positive news. However, yesterday we got the German CPI, which came in really, really hot. And then this morning we got the French inflation rate year-on-year prelim for May, came in at 5.2% versus 4.9%, relatively hot. We also got the inflation rate year-on-year flash for May for the Eurozone, came in really hot at 8.1% versus 7.6%. So those are the sweeps down that you see in the overnight session, kind of coincides with that. At 8:30 Eastern, we got the Canadian GDP growth rate, which came in at 3.1% versus 5.6, a big miss for Canada's GDP versus the street. GDP growth rate Q on Q for Q1 came in at 0.8, another big miss versus 1.4%. We just got the Case-Shiller home prices for March. This is an old number. We already know what the market is doing in May, so this is not going to be relevant. It looks like home prices for March year-on-year final came in at plus 21.2%. Can you believe a house is worth 21.2% in 1 year from March to March? Just incredible. By the way, the housing market is, as many of you know, the housing market, the inflation in real estate, it can be correlated with the inflation in overall pricing, or another way to say that, it's the devaluation of your currency. So, a lot of times these are tied together. Today we have Chicago PMI. For May, this number comes out to members at 942, comes out to the public at 945. This can be a mover. It is not, it hasn't been much of a mover lately. It used to be a high tier number. It is not. Expecting 57. Consumer confidence coming out at 10 a.m., looking for 104. And then Dallas Fed manufacturing low tier at 10:30. This evening, we have some numbers out of Australia. 8:30, we have a number out of Japan, and then we get GDP growth for Australia this evening at 9:30, but we also get the Keishin manufacturing PMI for May for China at 9:45. This is a major figure for those of you who trade at that hour. Okay, so that's what's lined up as far as key earnings. Not much pre-market. After the close, we get HP and Salesforce. And for those of you who care, we get Victoria's Secret too, in case you're holding that stock. But HP and Salesforce coming out after the close today. Turning our attention to this part of the chart here, folks. The rotations have been adjusted. The rotations have gone down dramatically week on week. This was about 16.5 for last week, and now it's 13. Crude has come off quite a bit. It used to be in the 56-cent range, now down at 47. This comes with a rallying market. The rallying market causes the rotations and volatility to go down. But in the NASDAQ, a typical rotation is 50 points. 50 points, 200 ticks. Not a typical, but shouldn't say typical. The extent of a rotation, which is considered normal, which is what one standard deviation describes, one sigma describes, is up to 50 points. So anything from a tick to 50 points is considered normal. Anything from a tick to 13 points is considered normal in the ES. The mode is a little bit of a different number. The mode describes the most common rotations. I'll give you those if you want to note those down. I don't generally put the mode onto those charts, but in the ES, the mode is 6 points. In the NASDAQ, the mode is 23 points of rotations. This is the most typical rotation from high to low on a 1 minute chart going back 10 sessions. Okay. Again, for the S&P, it's 6 points. For the NASDAQ, it's 23 points. For the Russell, it's 2.8 points. For the Dow, it's 37 points. And for crude, it's 18 ticks. And those are important to know because we need to adjust for volatility as the market rotates day in, day out. The S&P, we have a multi-distribution profile. We have 296,000 contracts traded. This is higher than what is on the edge of what is standard. This is higher than normal. Also, the range is higher than one standard deviation. This tells us that there's quite a bit of activity and it's likely to carry over into today's session. So we need to be aware that this is not a session where you want to get distracted and lazy on the open. I'm not advocating to trade the open, but this is indicating that there's been quite a bit of price discovery. The mode has shifted down from one 41.38 to 41.29 and a quarter. And it is a pretty droopy profile so far. That's what's on deck. Looking at, let's take a look at Edge Pro X real quick. At Edge Pro X pretty quick here. If you look at how things are shaking out on this chart, what we're seeing is the Friday having finished right at the high. So you could see Friday settlements 41.55.75, and that's only a few ticks from Friday's high. Friday's high is 41.57 and a quarter. This was Friday's close was quite strong, quite bullish, and that carried over into Sunday, and it's tracking back today. And what we have now is the overnight point of control right on top of the Friday point of control. So what the market has done is it has tested prices above Friday's high right up here, which is the weekly high. It has checked these up to 4,200, and it is accepting the price that is the Friday's point of control. Very methodical, and it is very. This describes who is likely to be in control today, and that is the short to intermediate time frame trader. So this creates, to me, this creates pretty good possibilities for today. Pretty decent trade, most likely for today. Multi-distribution profile. You can see that price discovery is pretty active. You can see that in the profile there. Very jagged, chunky profile. This tells us that a lot traded throughout the range. There was a fight at several prices, but the fight is settling in, as I said, on the point of control of Friday. So you can see here we continue to build up this area. Looking at the TPO chart, now this shouldn't exist here. I didn't have time to go and delete this data here, but here it is, Friday close, right at the peak of that profile. We have broken away from this big consolidation area. We left a gap behind, right? So we have consolidated near the lows, and we have broken out on Friday. This is a big threat to the shorts, and I had talked about earlier last week. I had talked about the fact that short position holders are very likely to short traders are going to be very news sensitive. That's what I was saying. So any type of good news is likely to blow the shorts out, and you can see that this was very successful. This was very true, right? So that's important. One thing I did want to cover, actually, and I forgot to do it because it's the first trading day of the week, regular day of the week. I like to go through and talk about what's ahead for the week. And what's ahead for the week, tomorrow we had some key numbers. We still have some key numbers tonight for China and Australia. But tomorrow we have the unemployment rate out of the EU expected at 6.8%. We have the Bank of Canada interest rate decision tomorrow. We have the JOLTS job openings, which has been an outstandingly high number historically. ISM manufacturing PMI and balance for the U.S. and balance of trade for Australia. Lots of big numbers tomorrow. Then we have the ADP release, the ADP employment change for Thursday, because you know what? Friday is going to be the first Friday of the month, which means we get U.S. unemployment. So the Thursday we get ADP. ADP is expected. It's normally Wednesday, but because we had a holiday, it shifts to Thursday. Same with crude oil. Crude oil is likely to shift to Thursday. So ADP is expected at 205,000 on Thursday. And on Friday, we get balance of trade for Germany. We get unemployment and non-farm payrolls on Friday afternoon. And ISM manufacturing on Friday. be aware that this is a week that has a lot of scheduled events. This is likely to be a relatively eventful week, especially after this strong breakout that you see in front of you. I mean, we were expecting the market back. When we were down here, I was talking about the 40-15 being a very, very likely test area. And what we did is we blew right through it, this high volume node. The market was not interested in balance here. It really did a little wiggle and it just broke higher. This was controlled by the higher time frame, these rallies. And we have cleared the low volume zone that you see in the chart here between 40-40 and 4100. We've cleared through the 4100. We've gotten as high as 4,200 today. In my opinion, and I wrote this last night in my homework, that, and I'll show you this chart here is just another way of looking at it. Let's drop back to the review segment. This is the daily composite chart. It looks very busy, but this is just an overview chart of the entire kind of swing, and each bar represents one trading day in the day session. These are RTH all day bars. So they go from 8:30 to 5 Chicago time, which is 9:30 to 4, which is the stock market session. And I like boxes. I love boxes. Trading off of boxes gives me some comfort as to the type of narrative that's going on. You could see that value shifted down, the point of control shifted down and shifted slightly up, and we broke through that 40.80, 975, and we finished very bullish. Look at that candle. The top of the candle does not have a wick, and so we had consolidated. We spent the last 3 weeks, each one of these boxes, these gray boxes, is a week. And when I go from gray, dark gray to light gray, that's a month. So I'm tracking the monthly time framing, and I'm tracking the weekly time framing, and I'm tracking the daily, all on one chart here. Beautiful, right? So we could see that the last 3 weeks we've spent kind of consolidating, building a rounded bottom. We had multiple rejections of the lower. If you recall, 38.55. We went down below 38.55, then we came back to 72, 38.72 before rallying, and I had that's when I started to say that the shorts are very vulnerable to good news at that point. And what we did is we broke out of the box, out of the prior box, into this next box here. And what we did is we stalled out on the long-term high volume node here, not the short-term, but the long-term high volume node. And what I wrote in my homework on the Convergent Trading Head Trader channel is note the clear consolidation shop zone at the lows and the clear breakout on Friday. Once the ES clears 4,200, which was the high on Sunday, I would expect a retest of 43.34. Bam. That's your point of control for this entire region. Going all the way back to 2007, this is your point of control, folks. 43.34 is the big magnet, and then if it tests that and holds, then we are looking at 44.60, which is the swing magnet. That's from the high to the low. The all-time high to the low, the most traded price is 44.60. That's the MC point of control, starting with the high that was put in earlier this year. So 43.34 and 44.60, big swing targets. We traded the bejesus out of this area here. We cleared this area and have moved into balance right here. This is where we stopped on Friday on top of this 41.50 balance. We got the 57 quarter on Friday, and we finished with a settlement of 41.55. Very, very methodical. You could see that the range has dropped, volume is dropping, and that's common for a rally. Okay, so that's the big overview. I showed you the TPO chart. Let's take a look at what's expected for today. Just setting up the chart here for you. So I'm going to go over what are maybe possibly confusing charts here. For those of you who are new, and I know there are many because the analytics say so, a lot of unique visitors, you're going to see a lot of lines, and you're going to wonder why there are so many lines. What is going on here? I need to look at my stock zone chart because it is not operating correctly. It is not showing what it's supposed to. Okay, so let me pull up my stock zone chart in the chat room. The stock zone chart needs to be adjusted, but the key levels that we're looking at here are the key resistance. This is at 42.49. Oop, can't write. So this is 42.49-ish. Okay. Then you have a magnet at 41.47. This was the area that is likely to trap price. We're expecting price to come right back into this area, and it did in the overnight session. And then we have at 40.96, where is that? 40.96, right in here is the over-under line. So I'm expecting the market to, the over-under line simply describes how far the market can drop and still be bullish, if from above, or how far the market can move up for today's session and still remain bearish. So as long as it holds above this 40.9650 area, it still has a good shot at taking out the most recent high. So what am I expecting for today? Today, we are opening right up against Friday's point of control. The point of control keeps kind of bouncing around here. We're opening right against Friday's point of control here. It's back to 41.38. I'm expecting this is a weak low as far as I can tell. At 41.21, I'm expecting this to be gone. Why? Because we are under VWAP, under mid. We've already tested above the high of Friday, and we are likely to welcome or look for further tests lower. So I expect it to give up this 41.2150, the stock zone right here at 41.20 was here before the low was put in, and I expect it to push as far down as 4100, potentially to this 96 over underline for the bounce. And then I'm looking for it to consolidate and hold steady here. So what we end up with is a higher low, but not a higher high. I'm really not expecting a higher high today. Be interesting if we got one, but this thing has run quite a bit and has gotten to 4,200. So looking for responsive selling on the open this morning, and I'm looking for this to be a contested move down. So I'm expecting it to be supported at my stock zones, which gives me small short-term opportunities to get long on scalps. So very short-term trades on the long side, more structured trades on the sell side, because that's where the immediate trend is, despite the bigger trend. The secondary is an open that tests 41.2150. Then it invites a test of the 41.2150, gives us the overnight stat. Then it invites an impulse back to the 41.47. That's 25 points right there. And then consolidation up here that breaks higher. This gives us the push to 4,200 to retest this 4,200 area. That's scenario 2. So scenario 1 is looking for a test of 21, a push back to 47, consolidating at the 47, and then breaking the current overnight high is 4180, and there's also a 4200 overnight high, but it's likely to target the 4200. So if we get that impulse to the upside, in other words, we get a rotation that's bigger than, if we get a rotation bigger than 16 points call it 16, 20 points, something like that. We get a strong rotation without much of a pullback. It is very likely to target 4,200. So if we can get a long somewhere in that, on a pullback in that area, 4,200 is going to be the target for the runner. Those are the two key scenarios. Not expecting a big drop today or a reversal. I'm not seeing an impetus for that. I'll leave you with those thoughts. Long trader bite, but it is the first trader bite of the week, and it's commonly long. Good luck, and I will catch you tomorrow morning. Take care.